You are listening to KSG Podcast. This is a short, crisp, concise, exam oriented, edited editorial for civil services aspirants. In this podcast, we are going to talk about global corporate minimum tax. Source is David McHugh's article for the Business Standard. Leaders of the world's biggest economies endorsed a global minimum tax on corporations, a linchpin of new international tax rules aimed at blunting the edge of fiscal paradises amid skyrocketing profits of some multinational businesses. The endorsement aims to deter multinationals from stashing profits in countries where they pay little or no taxes, commonly known as tax havens. The proposal was finalized in October among 136 countries and sent to the G20 for a final look after complex talks overseen by the Organization for Economic Cooperation and Development. It would update a century's worth of international taxation rules to cope with changes brought by digitalization and globalization. The most important feature, a global minimum tax of at least 15%, a key initiative pushed by US President Joe Biden. This is more than just a tax deal. It's diplomacy, reshaping our global economy, and delivering for our people, Biden said. Treasury Secretary Janet Yellen says it will end a decades long race to the bottom that has seen corporate tax rates fall as tax havens sought to attract businesses that use clever accounting to take advantage of low rates in countries where they had little real activity. Now, how would a global minimum tax work? The basic idea is simple. Countries would legislate a minimum rate of at least 15% for very big companies with annual revenues over 750 million euros, that is $864 million. If company earnings go untaxed or lightly taxed in one of the world's tax havens, their home country would impose a top-up tax that would bring the rate to 15%. That would make it pointless for a company to use tax havens since taxes avoided in the haven would be collected at home. Now, how would the tax plan address the digitized economy? The plan would also let countries tax part of the earnings of the 100 or so biggest multinationals when they do business in places where they have no physical presence, such as through internet retailing or advertising. The tax would only apply to a portion of profits above a profit margin of 10%. In return, other countries would abolish their unilateral digital services taxes on US tech giants such as Google, Facebook, and Amazon. That would head off trade conflicts with Washington, which argues such taxes unfairly target US companies. So, what is the US role in agreement? Biden has staked a claim that the US must join the global minimum tax in order to persuade other nations to do so. That would involve raising the current rate for foreign earnings from 10.5% to reflect the global minimum. His tax proposals are still being negotiated in Congress. US participation in the minimum tax deal is crucial simply because so many multinationals are headquartered there, 28% of the 2,000 biggest global companies. Complete rejection of Biden's global minimum proposal would seriously undermine the international deal. So, does everyone like the deal? Some developing countries and advocacy groups such as Oxfam and the UK-based Tax Justice Network says the 15% rate is too low. And although the global minimum would capture some $150 billion in the new revenue for governments, most of it would go to rich countries because they are where many of the biggest multinationals are headquartered. Developing countries took part in the talks and all signed except for Nigeria, Kenya, Pakistan, and Sri Lanka. US critics, including Republican leaders and some business groups, say the proposed minimum tax would make America less competitive and potentially cost jobs, a sign that the key is to get passage from other nations so the US is not disadvantaged. Finally, how would the agreement take place? The tax on earnings, where companies have no physical presence, would require countries to sign on to an intergovernmental agreement in 2002, with implementation in 2023. The global minimum could be applied by individual countries using model rules developed by the OECD. If the US and European countries, where most multinationals are headquartered, legislate such minimums, that would have much of the intended effect, even if some tax havens don't. So that's it for this podcast. Thank you so much for listening. To join KSG India courses and to crack the IELTS exam, visit ksgindia.com. You can also get a PDF of this podcast on ksgindia.com.